Well, thanks so much for tuning into this edition of Talking Point. I'm your host, Neeraj Shah. Well, sugar has been a commodity which has been in focus of late, and not just the commodity of per se, but the mills surrounding sugar as well, for a variety of reasons. It's not just about how sugar prices internationally have behaved in the last 3 months. It's also about this whole focus around alternate revenue streams, which are a lot more stable and less cyclical than the mainstream sugar revenue stream for sugar companies. So we thought it's best to get in arguably the leading sugar franchise in the country to talk about how do they see the next 5 years compared to the five gone by, or compared to the last 15 years or 20 years maybe, if it's possible to actually look that far, and also talk about a bit of the near-term measures as well and the current season. Mr. Pramod Patwari joins in right now of Balrampur Chini. Good having you. Thank you so much for joining in. Um, just at the outset, can we talk about the current season and how it is shaping up? Because there are a lot of things that seem to happen in the last 3-4 months. Recoveries have gotten impacted due to a variety of factors, including the virus. And the ethanol blending program seems to be going in full steam, with E20 being allowed and some murmurs about E100 as well. How is the current season shaping up for you?
Good morning, Neeraj. So, sugar season 2021, before the start of the season, it was expected that production would be in the region of around 31 to 31.5 million ton. Now, as the season progressed, it was reduced to 30.2 million ton by ISMA. Our in-house view at this point in time is that it should be between 29.5 to 30 million ton. Maharashtra and Karnataka is going to see a good production this year on the back of good weather conditions. However, in UP, the cane availability got affected because a large portion of the UP acreage under sugarcane got impacted because of the red rot disease, particularly the western part of the UP. That affected the availability of cane as such. In addition to that, recovery this time is also on a lower side because of the weather conditions. But having said that, at the start of the season, it was expected that sugar recovery would be in the region of maybe lower by 60 to 70 basis points. As the situation stands today, we at Balrampur are looking at lower recovery to the extent of 30 basis points. So, on production side, we are expecting a production of around 29.5 to 30 million ton. Consumption, we are keeping at around 26 million ton. Government has announced the export supportive policy in the month of December. And as you rightly said, the international prices are quite supportive at this point in time. And we believe that 4.4 to 4.5 million ton has already been contracted out of the 6 million ton. And we are quite hopeful that this year also we should be in a position to export 6 million ton out of the country as we did last year. So that will result into a drawdown of inventory by around 2 million ton, maybe 1.5 to 2 million ton by the end of the sugar season. As far as the ethanol is concerned, as rightly said, government spoke, there is a clear-cut focus from the central government on the ethanol blending program. They have fast-forwarded the blending target of 20% from 2030 to 2025. Previous historical high quantity of supply from sugar industries to our marketing companies was around 189 crores liter. This year, I think there is a industry have offered around 325 crores liter. So we will be seeing the all-time high this year. And as the new capacities are coming up, for which the government is also giving the interest subvention loan, we are of the hopeful that in next 3 to 4 years of time, we should be in a position to convert sugarcane as well as sugar to the extent of 5 to 6 million ton. If not 6, definitely at around 5 million ton into ethanol. That being the case, if we are assuming a sustainable production of say 32 million ton on an annual basis, and 3 years down the line consumption goes to a level of 27 million ton, then there will not be any case for export as such. So this is a structural change which we are witnessing. As far as the Balrampur Chini goes, we are ahead of the curve. We will achieve this target of sacrificing or converting our surplus sugar to the extent of around 18 to 20% in 2 years' time.
Wow. So you are saying that the technology and the economics for converting sugarcane juice directly into ethanol is already a go.
Yeah.
Okay.
So
And it's
just to give you some number, out of this 325 crores of liter of ethanol, which we said at the beginning of the call, I think around 40 crores liter is out of the juice route. Almost 40 crores liter will be out of the juice route.
Oh, wow. Okay. Okay. So let's try and dissect this, because these are two very important pieces of information that you've given me. One, of the sugar exports, and if indeed this large portion gets exported, then maybe not in the next year, but in the year after next, could we see a sharp drawdown in sugar surplus and therefore a natural support to prices even if MSP exists? So my question to you is, would you reckon that the industry will be able to export this 6 MT of sugar even if the rupee were to strengthen vis-a-vis the dollar?
Yeah, we believe that it will be in a position to export. Industry has already contracted around 4 to 4.5 million ton of sugar. When we contract, normally we also do back-to-back rupee hedging also. So that part has already been taken care of.
Okay. Okay. The other bit, Mr. Patwari, is this whole change that comes to the industry, and that's a belief, of course. I would love you to dwell upon it. The change that comes into the industry as a result of, one, the MSP, which provides a bit of a downside cushion. Two, this whole export incentives which the government is giving in order to clear the backlog. And three, the ethanol program, which adds maybe a bit of predictability to what is otherwise a very cyclical industry. Can you tell us if indeed you believe that the next 5 years, or say sugar industry in 2025, would be materially different from what we've seen in the last 15 years?
Yeah, that's a very important point which you have raised. See, we have seen a structural change in the sugar industry in last couple of years. India has been a structural surplus producer of sugar because of the improvement of varieties. That has led to a situation where the sugar production has always been higher than our internal consumption. The government came out with a beautiful idea of addressing this surplus situation by two-pronged strategies, long-term and short-term. In the short term, they are addressing this surplus situation through export support, and the buffer stock was also there. In addition to that, MSP was also put in place. So that acted as a floor price, because in the commodity business, if the supply is on the higher side, that kills the prices. So that portion was also taken care of. Now, from the long-term perspective point of view, they allowed diversion of sugarcane juice directly into ethanol as well as through B-heavy route. These two measures are expected to convert 5 to 6 million ton of sugar into ethanol, thereby taking care of that surplus situation. So next 5 years, we would see the proportion of ethanol revenues out of the total revenue of the sugar company will be a totally different proportion. Balrampur, as it stands today, we are at around 9% of our ethanol revenue when compared to overall. We are targeting around 30% by 2023.
2023, you said?
By 2023. Our distillery capacity, which was announced few months back, will come into operation in the month of November 2022. Post that, we are targeting at least 30% of our revenue to come from ethanol business.
Okay. So how does this change the internals for Balrampur Chini? If you can dwell upon that a bit. We are hypothesizing, so to say, let's assume. So I'm not asking you for exact numbers, but if 30% is from ethanol, what does it do to the predictability of revenues? What does it do to growth? Because if it comes into operation from November 2022, it adds to the already existing sugar and ethanol and bagasse revenues, right? That is part two. And part three, what does it do to the operational metrics for Balrampur Chini, consolidated, all three streams put together from where it is right now?
Right. So our internal vision is that we should be producing only that much quantity of sugar which we can sell in the domestic market. For cogeneration, because of the lowering of the tariff by UPRC, we are producing power only in the crushing season to feed our captive requirements, and we are selling surplus bagasse as and when we can. Going forward, the profitability will come from the ethanol division. The main contributor to the profitability will be the ethanol division. And as you know that sugar which is being produced over a period of 4 to 5 months usually is stored, and thereafter it gets liquidated over a period of 15 to 18 months depending upon the overall demand supply situation. But when we move into ethanol, that working capital conversion cycle is extremely fast. The moment we supply ethanol to the oil marketing companies, money is in our bank account within 21 to 30 days. As a result of which, a good amount of working capital will get released, and there will be a significant cash accrual out of the operations. So we are visualizing a situation where Balrampur Chini after 2 to 3 years will be significantly lower in terms of debt.
By significant, any internal estimates that you can share?
Yeah, currently we are having term loan of around 375 odd crores. And those term loans are sitting on our books only because of the reason that it is carrying a very low rate of interest because of interest subvention. Working capital also we are having excess between 4 to 5%. Commercial papers are coming at around 3.5 to 4%. So when we would be generating that much amount of cash, a part of that will go into liquidation of working capital as such.
Okay. And last couple of questions. One is on whether you believe that therefore that both the, I mean, let's think about Balrampur Chini 3 years out. What kind of growth in revenues do you anticipate? Because you mentioned that ethanol could be 30%. And my key question, if ethanol helps in working capital cycle, if there is a predictability to the revenues, and therefore you would have a vision of what kind of capex you do and the IRRs that you receive on the project, etc. What is the kind of operational metric uptick that you believe? I mean, can console margins, console return ratios improve? If not immediately in 2023, then say starting 2024 or thereabouts. Give us some vision.
So recently we announced a distillery which will be one of its kind in India. During season we intend to run that distillery on cane juice, and thereafter in off season on grain, maybe out of maize or surplus rice. So we would like to see the success of this model, and thereafter we can go for, means there is nothing on the board at this point in time, but as because you have raised a question, there will be a new stream available. There will be a new avenue to look for growth. Production of ethanol out of surplus rice or wheat. That will not depend upon the cane availability as such.
Okay.
So that could be one of the potential area for growth. But there is nothing as such in our mind or at the board level for discussion.
Got it. One last couple of questions, and I make it quick. One is, we heard reports of oil marketing companies not of having the right offtake for ethanol, even though the mandated quantity is about 10%. Did you face some problems like this, or was it only for Maharashtra?
There are some hiccups, which these are around short-lived, I would say. Last year also, in spite of COVID situation, industry supplied 173 odd crores liter. So I think all this will be taken care of. We are in continuous dialogue through our association with oil marketing companies, and we are sure that this will be taken care of.
Okay. For Balrampur, Mr. Patwari, I'm just trying to guess though. I know you can't give me exact numbers, but just trying to think out loud. Do you believe that the return ratios and the margins, thinking about it the way you do, could be materially higher 3 years out?
See, I would like to answer this question in a different way. The debt will significantly come down. So that will also act as a tailwind for improving the ratios as such.
But what about the margins?
Sorry?
What about the margins?
Margins will not go down from here, because you must also realize that we have a slight limitation in terms of predicting the number, because we don't know what would be the cane price next year.
Got it. Okay. Well, let's hope it's been staying steady for the last 3 years. Hopefully it stays that way. But it is for UP. But lovely talking to you, Mr. Patwari. Thank you so much for taking the time out, and all the best for the season ahead.
Thank you so much. Thank you.
And viewers, thanks for tuning into this conversation.